Yo, what up everyone? In this video, I want to break down the anatomy of a perfect trading setup, which is something that I call the $1,000,000 trade. Now, the best trades that I take, which I make the most amount of money on, comes from when everything that I'm going to explain in this video is checked off. And I call it the $1,000,000 trade because I size up on these setups. I know it's a high quality trade, and I know it has a good chance of working out. Now, I'm not at the level where I'm making $1,000,000 profit per trade, but trading is very scalable, and I know the $1,000,000 setup has a high chance of working out. I'm going to break down what I look for, and I'm also going to break down the technicals behind the trade that I recently took with the $1,000,000 setup. Before we get into it, though, if you want a very good trading resource, I'm going to link my Instagram in the description below at Entrepreneurship. I post daily trading recaps on here, along with very good trading tips and tricks that you're not going to find anywhere else. It's a good resource, and you're definitely missing out if you're not following it. Link is in the description below. But now let's get right into the $1,000,000 setup. The first component to the $1,000,000 setup is understanding the context prior to new development in the market. What I mean by this is we have to understand the context before the market opens up to get a good sense of the current auction. Where are buyers buying? Where are sellers selling? Do we have buyers factored in? Do we have sellers factored in? Where is supply? Where is demand? Where's support? Where's resistance? Where do we have a key level? And what are the market conditions? You have to understand the context prior to development because this is going to bleed into the intraday picture where we need to put a trade on, but we have to understand the context backing the larger time frame picture in the market. We're slowly going to put the pieces together, but this was a recent $1,000,000 setup on PLTR, and understanding the context to new development is essentially this. So back in May, we bounced off of this demand zone at $19.03. We also are putting in a inverse head and shoulders pattern, left shoulder, head, and then right shoulder, where we have a key level at $27.50. This is an area of resistance where the market had a hard time breaking above. It's almost like an exact price where sellers stop the market, which differs from supply because this is a supply imbalance where it's an area of selling imbalances in the market where the supply equation was out of equilibrium. Also, most recently, last week, we bounced off of this 25.14 demand zone. So we have buyers factored in down there. And on the way up, which is a bullish sign, we are also creating demand. So everything that I'm saying in this little piece right here is screams to the bullish side, where the odds of moving up are much higher just off of prior to new development and a larger time frame picture. The second component to this setup is you need a plan. Now, I see a lot of traders enter the market without a plan. They enter blindly. And all I could say is you need to have a predetermined plan prior to entering, and you need to have the flexibility to bend and react your plan a little bit to whatever the market's giving you. No one can predict what's going to happen next, so you need to be flexible enough to bend and react to the different things the market throws at you. And every day in the Discord, I post pre-market plans of the setups I'm watching, the levels that I'm looking to trade at. PLTR, I said the setup looked fantastic. We had a strong key level at 27.50. We're watching for a break above this to play calls, targeting the first 28.58 supply zone, and we also had demand at 26.33 that we have to watch for a pullback into. So the plan on PLTR visually was a break above this 27.50 key level for about $1.30 into the nearest supply zone at 28.58, or a pullback into demand lower as long as we had a valid reversal. Now the third step is the entry. I need to have confirmation signals. I have plenty of ones that I look for. Trade members know this. But I need to see these signals to trade on the same side as buyers or the same side as sellers. If I'm looking to be long something, I want to trade when buyers are buying. I don't want to do it when sellers are selling. Now, if I'm bearish on something and I want the market to come down, I want to trade on the same side as those sellers. But before I enter, I have to ask myself, is this trade based off of my edge? My edge gives me an advantage over the competition. It's something that I know works for me in the long run, and I know this because of my journal. Or am I entering based off of a feeling, which is not good? And I don't take any trades based off feelings because I know I lose the most on those. So PLTR intraday, we opened up, and here's that 27.50 key level where this was my entry. I front run this a little bit. I got in prior to breaking because I was anticipating a break above this. I posted my entry in the Discord if anyone wants to go back to look at it. But I got long. I traded the equity at 27.38 was my fill price at 9.31, anticipating a key level break at 27.50, targeting the supply zone at 28.58. But before I enter the trade, I need to have a stop loss predetermined and I need to have an exit predetermined. My stop loss is going to be where I'm proven wrong if the market reaches that point based on price itself. Now, if I go to the chart, it's not based off a dollar amount. It's not based off a percent amount. It's where my original thesis and plan will be proven wrong by the market. For me, my stop was low a day. It was about 40 cents away. Now, once I have my stop loss in mind, I need to have an exit. You can't think the market's going to go up forever. It also can't go down forever. So where does it make sense to target based on the chart where the opposing participants can possibly be present? Now, if we're in long, if you have resistance above, if you have supply above, those are potentially good targets. Same thing to the downside. But you have to ask yourself, if I'm long over here, where can the market potentially reverse and start turning against me? At what price and at what area? For me, since we had nothing above this 27.50 key level, which was the reasoning for entering this trade, the next thing stopping price was this 28.58 supply zone. And obviously intraday, we could have some new information that does develop. But that was my exit. And you always have to ask yourself, can I get my 2-to-1 risk to reward, or can I get a 3-to-1 or better? Obviously, the higher the number, the better off because you could afford taking more losing trades. But can I get at least 2-to-1 on this trade? And if I can't answer that, if I can't get a 2-to-1 risk to reward, I'm not taking it because I either mistimed it and my entry is not at the right spot, or my stop loss is a little too far and the trade is just not going to make sense to enter. So you have to put these three things, your entry, your stop loss, and my exit, all have to be thought out before the trade puts on. And if it doesn't make sense where all three of those factors align, then I don't have $1 million setup, and I don't even have a low quality setup either. But I need to have an entry, I need to have an exit, and I need to know where I'm going to be proven wrong solely based off of the chart. So one of the biggest steps is understanding the market context as the market is developing. If I'm in prior or if I'm in after, I need to understand the auction intraday. I always ask myself, can I read the intraday context? If I was a buyer at 27.50, where am I hurting? Where am I in pain? Am I showing effort? Am I getting rewarded? How is volume? If I was a seller at, let's just say, 28 bucks, am I hurting if the market keeps rallying? Where is my max threshold of pain? Where am I going to be happy if we get below? Is there volatility? Where are other buyers buying? Where are other sellers selling? Who and where are trapped? Understanding the context intraday, as long as there's volume and volatility, because those are the leading indications for a trade that I put on. So I'm in here. I had no clue what was going to happen. I just put the trade on. I had my stop loss, my exit, my entry all lined up. And now I'm just in this trade and I'm trying to read the context intraday. Now, the first sign of what I saw was as we were moving up, there were heavy bids reloading into the market. You could have seen this as a large trader or traders maybe leveraging into a position for a further move up. But we kept getting buyers reloading the positions and sellers were very scared to bring the market lower. Now, it wasn't until we got to about 28 bucks. Keep in mind and put yourself in the perspective that I'm in. I'm long all the way down here, and we moved in about a 6-7 minute period about 50 cents on a $27 stock. Now we come up to 28 bucks, and there was a huge wall of selling at 28 bucks, which was kind of scaring the market a little bit, which is why we got to pull back briefly. Then we start flagging near the highs. Now this is where the first kind of, other than the $28 wall of sellers, this is where the first sign of context comes into key. We have a bunch of late longs entering the market, traders that are buying breakouts where every level that the market is looking at. For example, 28 bucks, it's a high a day breakout. If you've been following me for a while, you all know what I feel about high a day breakouts. We broke out about above the high. Heavy volume started coming into the market, which tells me a lot of participants chased this move. And there was a true seller up there absorbing those buy orders and did not agree with price heading higher. So this was the first sign of weakness in the market because we broke above 28 and we immediately rejected it. If I'm a buyer down here, I'm not too worried. But if I'm a buyer all the way up here near the highs and I actually got a new position at 28 bucks, when I see that rejection and the immediate move down, I'm going to start worrying a little bit because I'm stuck now all the way up here. The market can sell off. So we had a bunch of trapped longs there, and I knew the market was going to put them in max pain because that's how it works. It hunts where they're hurting the most. And usually, how many times have you guys, let me know in the comments below, stopped out of a position and immediately the market started reversing and moving in your favor as soon as you got out for a big loss? It's happened to all of us. So then the market starts moving down, and again, at this point, my stop loss is this 27.03 area. I did get a little worried, but because we were so high up from where I entered, I wasn't going to let a little pullback scare me. If we got to about the 27.50 area again, and my position was soon to be underwater, I would have started worrying a little bit and maybe deviated and bended my rules a little bit. But this pullback held VWAP. I wasn't worried with the buyers reloading their bids over here, defending this move down. Now, if we come back to test those trapped longs intraday, we start moving up. They're going to show effort in moving us higher. We're about 40 cents away from the supply zone. Now, these buyers here are not underwater anymore. They're actually going to get rewarded as we move up, and this fueled a further move up. Now, one thing I want to note is this area right here where we consolidated. We want all the participants, especially those buyers above 28 bucks. If we pull back into this to defend this area, the market is also making higher highs, is also making higher lows. This is the type of dialogue that you have to do in your head as the market's developing. It's factual pieces of information, not based on what you think is going to happen. If I went to my old habits when I first started trading and didn't have the $1 million setup, I would have saw this little pullback and I probably would have got scared and let my emotions do the trading and got out of this position in fear that the market is going to continue selling off. But the facts are we're holding higher highs, making higher lows, creating demand, buyers are defending the area, volume is slowly starting to build, and then we finally get that push into supply. Now, as soon as we get this volume push into supply, I got out 75% of my position just to protect myself. I understood how strong this volume was. As the market was developing in the first 5 minutes, you could see very heavy volume. And also, at this point, I don't know the exact number, but I actually said it in the Discord. Let me pull this up. I think we had about 42 million shares traded, about 11 o'clock maybe even 10:30, where the daily average was 48 million. So we're already doing almost our daily average about an hour into the market, hour and a half into the market, which is a very good sign if we're a buyer, especially coming into the supply with the market not being very strong as well. So I'm out 75% of my position. I have a few contracts, a few shares open in case we do want to rally and continue the move higher. A little later on in the day, I got out the rest of my position once we got this little push down. I didn't like how the market was just hanging out here. Yes, we were still bullish, holding above VWAP like we did earlier. We were still making higher highs, still making higher lows. I just didn't like this action, so I got out the remaining 25%. If I did hold and I did follow my plan, I could have got, an extra 40 or 30 or so cents to the upside, but I'll never complain about profits. The main money was made in the first hour and a half from this crazy push. Sick entry, sick exit, and I'll never complain about taking profits because I could give you 10 trades And I could guarantee you, no one is ever buying at the bottom or selling at the top. The key is just following your plan. Now, the seventh step is no emotions. As hard as this is, 90% of the trades I take and lose on, and I'm sure 90% of the trades you all take and lose on, all have to do with your emotions. I always ask myself, how do I feel prior to entering? Am I confident? I know if I'm confident, that means I'm trading off my edge. If I don't have this sense of confidence, I'm not really have this level of conviction on this trade, I know I'm trading against my edge, and I know this trade is not going to work out too well because I'm trading off of emotions. Now, as the trade is developing, we're going to have these emotions. Are you anxious? Am I nervous? They're normal. You just need to control them and do less thinking. In trading, less thinking is more. The more you think, the more you cloud your vision. And the more you cloud your vision is the more impaired it is and the decisions you are going to make based off of your feelings. I always ask myself, did I enter off of facts or did I enter off of my opinion? Everything that I just explained with this PLTR trade that I absolutely crushed, it was a sick trade and the profits were to follow. Everything that I did was based off of facts. Everything that I went over was off of facts. Never once did I put an opinion in there. And this is the type of analysis and the dialogue that has to go through your head as you are trading intraday. You have to be like a robot. I look at it like this. The worst is known. I know how much I'm going to lose or about how much I'm going to lose prior to entering. And the best is unknown. So the worst is known and the best is unknown because, maybe I could have scaled out at supply and this thing could have had news and went up to $70 by end of day. That's unknown. That's stuff we can't plan for. So I always expect the worst and the best can happen and I could be surprised. And you feel so good when your analysis works out and you trade based off of everything that I went over, because these are honestly the best setups that I take and it's the ones that I make the most money on. You could call them a quality setup. I just call it the $1 million trade because I know eventually I'm going to scale my position size where I will be taking at the level of much higher profits and hopefully one day get to that $1 million trade because that would be pretty sick. But I think I'm going to end it on that note. If you enjoyed it, I would appreciate it really if you could just drop a like on this video. I hope this helps. If you want to learn more, definitely check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. But besides that, I'm ending it. Peace out.